The human mind is not built for the stock market. It is a creature of hope, of fear, of fellowship. And in speculation, all three of these natural instincts will lead you directly to financial ruin. The greatest enemy a speculator has is himself. But the second greatest, the one who can slip past your defenses when you are most vulnerable, is your friend. The moment you articulate your position to another man, the moment you seek his opinion or his validation, you have sealed your own fate. You have ceased to be a speculator and have become a committee member. Committees do not make fortunes. They compromise. And the market has no respect for compromise. It only respects being right. Your desire to talk about your trades is not a search for information. It is a search for an accomplice. When you are in a losing position, you tell a friend not for his brilliant market analysis, but for the comforting lie, "Don't worry, it will come back." You want him to ratify your mistake, to give you permission to violate the most sacred rule of speculation, to cut your losses quickly. You are paying him with your friendship to endorse your own destruction. When you are in a winning position, you tell him so that he may admire your genius. This act of vanity lashes your ego to the trade. It is no longer a simple mathematical proposition, but a testament to your foresight. When the tape tells you to sell, you will hesitate, because selling would mean your triumphant story is over. You will hold on for the last eighth of a point, and in doing so, you will ride the position all the way back down. You did not want a profit, you wanted an audience. The market provides the former, but it will charge you your entire account for the latter. I learned this not through theory, but through the loss of a fortune. It was a lesson that cost me millions of dollars in a year of my life. I was short the cotton market. I had done my work. I had studied the conditions. I had read the tape. And every fiber of my being told me the price was headed for a collapse. The market itself was agreeing with me. My position was showing a handsome profit. I was supremely confident in my judgment. It was one of those rare and beautiful times when the line of least resistance was crystal clear. Then a man I respected came to visit me. His name was Percy Thomas, a seasoned and immensely successful cotton speculator. He was a man of great charm and intelligence, and he was known throughout the street as the Cotton King. He saw that I was heavily short, and he began to reason with me. He did not give me a crude tip. He was far too sophisticated for that. He laid out a masterful, eloquent, and entirely bullish argument. He spoke of fundamentals I had not considered, of demand from corners of the globe I had overlooked. He was not telling me I was wrong. He was educating me. And because I respected the man, I listened. Because I admired his success, I began to doubt my own analysis. He was so sure, so confident, that he made my own position feel like a boy's guess against a man's certainty. My conviction, which was based on the impersonal truth of the ticker tape, began to waver in the face of his powerful personality. He was not merely bullish. He was buying with both hands. He begged me, for my own good, to cover my shorts. He said, "Jesse, you can't be short this market. It's suicide." The force of his conviction overwhelmed mine. I began to think, could I be wrong? Could a man of his stature and experience be mistaken about his own specialty? The seed of doubt had been planted. I fought it for a time. I held my position. But his words echoed in my mind. He called again, his voice filled with urgency, pleading with me to get out of the way of the freight train he saw coming. Finally, I surrendered. I allowed another man's mind to do my thinking for me. I betrayed my own judgment. I covered my entire short line, and in a fit of utter foolishness I followed him. I went long cotton. I bought thousands of bales because Percy Thomas, the great cotton expert, believed it was going up. The market, of course, did not care about Percy Thomas. It did not know his name, nor did it respect his reputation. It cared only for supply and demand. And the tape, which I had correctly read from the very beginning, continued to tell its story. Cotton did not rally. It hesitated for a day, and then it began to fall apart. It collapsed in the precise manner I had originally foreseen. My initial paper profit from being short turned into a catastrophic loss from being long. I lost every dollar I had put into the trade and millions more besides. Percy Thomas himself was wiped out. But his ruin was no comfort to me. My failure was not that I had lost money. A speculator must be prepared to lose money. My failure, my sin, was that I had allowed another man to talk me out of what I knew to be right. I had lost my own mind, and that is the one thing a speculator cannot afford to lose. The pain of that loss was 1,000 times greater than the financial sting. It was a betrayal of self. Jesse Livermore consistently stressed that Wall Street extracts a heavy cost of instruction for every lesson learned the hard way. Fortunately, the core principles he developed to survive these expensive market penalties were captured for posterity by Edwin Lefebvre in the 1923 masterpiece, Reminiscences of a Stock Operator. It stands as the finest possible literary training ground, allowing you to absorb decades of painful operational experience without ever having to risk a dollar of your own capital. To ensure this timeless wisdom translates accurately to the modern, computerized arena, we advise seeking out the Max Davidson Annotated edition. Davidson's careful commentary is indispensable for bridging the gap between Livermore's era and ours. A link to this essential edition is provided in the description below. After that cotton disaster, I made a vow. I would never again allow any man, no matter how famous or persuasive, to influence my trading. I realized that speculation is not a team sport. It is a solitary art. It requires a state of absolute mental isolation. I built my own office, a sanctuary far from the buzz and gossip of the brokerage houses. I wanted no brokers whispering in my ear, no friends offering their 2 cents, no experts sharing their predictions. My office was quiet. It contained only myself, my quotation board, and the telegraph wires that fed me the unvarnished facts of the market, the modern equivalent of your clean, quiet trading station with nothing but price charts and a time and sales window. The ticker tape was my only confidant. It never lied. It had no ego. It did not care about my positions. It simply told the truth, second by second. Price and volume were the only 2 advisors I needed. Everything else was noise. All the opinions, all the news, all the inside information. It was a fog designed to obscure the simple reality of the tape. My job was to see through that fog. And you cannot see clearly when you are listening to a dozen different voices in your head. Think of the sources of these outside opinions. First, there is the broker. His job is to generate commissions. He makes money when you trade, not when you profit. He will always have a reason for you to buy or sell. His advice is, by its very nature, compromised. Listening to a broker's opinion on the market is like asking a barber if you need a haircut. The answer is predetermined by his own self-interest. Then there is the insider, the corporate executive who believes he knows what his company's stock will do. He is the most dangerous of all. He may be honest, but he is blind. He knows the facts of his business, but he does not know the market. He is emotionally invested. He sees his company's prospects through a lens of hope. I once knew the president of a large steel corporation. He was buying his own stock with every dollar he had, sincerely believing it was undervalued and destined for a great rise. He told all his friends to buy. What he didn't know was that a powerful syndicate on his own board of directors was quietly distributing their entire line of stock, selling into the buying that he and his friends were creating. The stock, of course, collapsed. The president was an honest man, but he was a fool in the market. He knew his business, but the tape knew the truth of supply and demand, and the tape is all that matters. Never trust an insider's opinion. Only observe his actions as they are printed on the tape. And finally, there is the well-meaning friend. His opinion is the most insidious because it is offered with kindness. He does not wish to harm you, yet he harms you all the same. When he agrees with you, he inflates your ego and makes you reckless. When he disagrees, he injects your mind with the poison of doubt, causing you to question your plan and exit a sound position prematurely. He forces you to defend your trade, to explain it, to justify it. The moment you start justifying a trade, you are already on the defensive. A professional speculator does not justify, he acts. He sees his signal, he enters. He sees his stop, he exits. It is a simple, cold, and impersonal process. Your friend's opinion turns this clinical procedure into an emotional debate. You must understand that the stock market is a game of psychology played for enormous stakes. The successful speculator is the one who has mastered himself. He has conquered the twin demons of hope and fear. Hope is what keeps you in a losing trade, praying for a recovery that will never come. Fear is what makes you snatch a small profit from a big move, cutting your winners short. Outside opinions are gasoline on the fire of these emotions. A friend's bullish story feeds your hope. A bearish headline in the newspaper feeds your fear. To win, you must starve these emotions, and you do so by cutting off their food supply, the opinions of others. My greatest periods of success came when I was most isolated. During the crash of 1907 and again in 1929, I operated in near total seclusion. I spoke to no one about my market operations. I read my tape. I analyzed the action of the leading stocks. I observed the behavior of the market as a whole, and I formed my conclusions in the quiet solitude of my office. When the time came to act, I acted with the full force of my capital, backed by a conviction that was entirely my own. I did not need courage because there was no doubt. The tape had spoken and I had simply listened. If you cannot be alone with your own thoughts, if you feel a compulsive need to talk about your trades, to share your victories and seek solace for your losses, you are not ready for this game. You are treating speculation as a social activity, and the market will treat you like an amateur. It will take your money with ruthless efficiency. The market is the world's most expensive club to belong to. This is not to say that a speculator must be ignorant. On the contrary, he must be a voracious student of conditions. But he must learn to differentiate between facts and opinions. A fact is the number of tons of copper produced last quarter. An opinion is someone telling you that copper is going to the moon. A fact is that the wheat crop in Argentina is suffering from a drought. An opinion is your friend telling you to buy wheat futures. The speculator's job is to gather the facts for himself, to piece them together, and to form his own independent conclusion about the path of least resistance for a given stock or commodity. He is a detective, not a juror. He does not listen to closing arguments from lawyers. He finds the clues and solves the case himself. The amateur constantly seeks shortcuts. He wants the easy answer. He wants to be told what to do. He listens to pundits on television. He reads newsletters. He joins online chat rooms, the modern-day equivalent of the old bucket shops where men gathered to gamble on quotes. A bucket shop was an office that looked like a legitimate brokerage, but it never actually bought or sold stock for its clients. It simply took the other side of their bets. If the client won, the house lost. It was an environment designed to encourage impulsive, emotional gambling, fueled by rumor and the herd mentality. The modern trading world, with its constant stream of social media commentary, is a digital bucket shop of the mind. It is designed to make you act on emotion, to chase hot tips, to panic on scary headlines. It is designed to separate you from your money by separating you from your own judgment. The professional understands that there are no shortcuts. The only path to success is through hard work, independent thought, and iron discipline. He does his homework in silence. He formulates his plan. He waits with the patience of a sniper for his setup to appear. And when it does, he acts without hesitation and without seeking a second opinion. He is his own man. Therefore, you must adopt the rule of silence as a foundational principle of your trading business. It is not merely a preference, it is a requirement for survival. Here is the law you must follow without exception. First, keep your own counsel. Never discuss your open positions with anyone. Not your spouse, not your best friend, not your broker. Your trades are your own private business. Speaking of them introduces emotion and ego where there should only be calculation. Second, build a fortress of solitude for your trading operations. Your trading desk should be a sanctuary, not a communication hub. Turn off the financial news channels, mute the social media feeds, leave the chat rooms. The only information you need is the price, the volume, and your own well-researched plan. Third, learn to trust the tape above all else. The price action tells the true story. The most bullish corporate press release is meaningless if the stock is being distributed on heavy volume. The most bearish news article is irrelevant if the stock refuses to go down. The tape is the final arbiter of truth. Let it be your only guide. Fourth, when you do your research, seek only facts, never opinions. Study earnings reports, industry conditions, and credit markets. But the moment an analyst or a friend says, "Therefore, I think the stock will go up," you must shut your ears. Your job is to take the facts and arrive at your own therefore. Finally, you must embrace the loneliness of the craft. The path of the successful speculator is not a crowded one. The very nature of the game requires you to be separate from the herd, to act against the prevailing sentiment at key turning points. You cannot be a part of the crowd and expect to profit from its mistakes. Accept solitude not as a burden, but as your most powerful strategic advantage. In the quiet, you can finally hear what the market is truly telling you, and that is the only voice that matters.